2020 has been absolutely catastrophic. But on the upside, people have been very generous and donated to many good causes to the people who are experiencing these hardships and also the communities that are experiencing these hardships. What you may not have known is that you may be eligible for a tax deduction on your income for making one of these donations. Welcome back to my channel. My name is Reese. In today's video, we are talking specifically about the types of gifts and donations that you may have made so generously and may be able to claim a deduction on your tax for. Gifting and donations are part of our society. Lots of people are very generous, and I hope that you are aware of it, but if not, stick around, that you can actually make claims on your tax for these expenses. Organizations and foundations around the world which allow you to make a deduction on your tax are called deductible gift recipients, or DGRs for short. In Australia, you are only able to claim a deduction on your tax for companies who are registered as DGRs. Three examples would be the World's Greatest Shave, the Salvation Army, and many of the fire funds that have been set up for the Australian bushfires earlier in 2020. As a disclaimer, not all charities are DGRs. As an example, crowdfunding campaigns that have been popping up on social media over the last couple of years are a really popular way for people to raise money and donate money. These generally don't have that tick of approval through the DGR register, and you wouldn't be eligible to claim for these types of donations. Just be wary that not all of your donations will be tax deductible. To claim a deduction, you must have a record, which is generally in the form of a receipt. A well-established charity or foundation will generally offer you a receipt as part of the process of you making a donation, which is great. Just make sure that you do keep record and make sure that they are a DGR. To check if a company you've made a donation to is a registered or entitled DGR, meaning you are able to claim a tax deduction on a donation you made to them, I've left a link in the description below, which will take you to a resource which will allow you to check the companies that you may want to check to see if they are registered DGRs. Just keep in mind that not all of these companies do issue a receipt when donations are made. In some circumstances, you may need to provide maybe a bank statement to prove that you did make a donation to this charity. The information that will generally be presented on the receipt of what a DGR provides you with after you make a donation would be that it's specifically a gift or donation that's been made by you, the name of their company, the ABN of the company, and the institution that the donation has been made to. So all of the relevant information to prove that that donation has been made and gone to the correct fund that it was supposed to. Remember that the person who made the donation is the only person who can claim the deduction on their tax. So just the general set of rules which apply to if it's a claimable donation. It must be a donation where it is a transfer of money from you to someone else. It can also be in the forms of property and shares, but that gets a little bit more complicated. I'm going to stick to the standard here and say that generally people donate with money. So it must be a loss of money to you to be giving to someone else. Leading into the donation must never allow you to make a profit from the donation or receive something that is an actual tangible gift. So things like a t-shirt generally is something that may be given away as part of a donation process. If you do receive something for your money, it cannot be claimed. I made this mistake a while ago where I bought a calendar as a donation for a very suitable charity that I do believe in very much. And unfortunately, come tax time, I thought I would be able to make a claim, and I found out very quickly that I was unable to because I received goods for the donation. I'm just glad the money went to a good cause. And generally, the gift or donation must comply with the actual company or foundation's guidelines, which is always going to be up on the website for you to be able to do your research. Generally, it's a cash donation. Don't think much more of it. Now, there are some non-traditional types of donations that can be made, like buying tickets to funds which are there to raise money for a good cause. Things like that are a little bit more complex, and I'm not going to go into the specifics of them in this video. I will leave links in the description if you want to read up a little bit more about those types of donations, or if you think they may be applicable to you, so you can go away and do a little bit of reading. Very simple stuff, just a lot of text to get through. So I highly encourage you, go and have a read if you think it may be applicable for you. One small win is bucket donations. So if you walk past those bucket donations outside of a Bunnings, for example, and put $2 in there, if you do that throughout the year, you can claim up to $10 without any formal record. If you do donate more money to a cause like this or an in-passing cause like this, they will generally offer you a receipt for your donation, and that is tax deductible as long as you have a record of that donation. Very specific things that you definitely can't claim, you cannot claim, are things like raffle tickets as part of fundraisers at charitable events. Like I said earlier, anything you've received, this could be in the forms of chocolates, mugs, t-shirts, merchandise, anything that can be on a shelf with an advertised price essentially. You can't claim the cost of attending fundraisers or dinners where you do intend to make donations towards. So make sure that that is an expense at your own cost to be able to go to these events and then donate money generously if that's something that you've ever done, but you can't actually claim the costs that you incurred for just getting to that position in the first place. Any donations made to things like schools where you may have got some type of competitive edge for your children, such as them getting first priority in classes or something like that, you can't claim it if you gain something from the donation. Gifts to family and friends or any form of donation to family and friends whatsoever cannot be claimed. So be careful with that one. If you were to be found doing that, you could get in serious trouble. Donations under salary sacrifice plans cannot be claimed on your tax. And not so commonly, but finally, any donations made under a will. Keep in mind, any donation made to a fund on social media must be a registered DGR. That's probably the most common way people donate these days. So I encourage you to do your research and just make sure before donating, if you're intending to claim, to make sure that they actually are registered and you will receive a record for making that donation. As an overview, that's it. That's how claiming donations works. It's a relatively simple process and nothing too overwhelming. Definitely, if you've been generous this year, consider claiming it on your tax because you've done the right thing, you've done a good thing, and you deserve that little tax break because it might be beneficial to you. I know a few people who have generously donated upwards of $500, and I highly encourage those people specifically to make sure that they are claiming it on their tax. So keep that in mind next time you're thinking about donating somewhere, and hopefully you learned something new in this video. If you did, please consider liking and subscribing, and I will see you in the next one.